Good morning, everyone. It's James here. I'm still in the hotel, so I'm using my Powerbeats Pro headphones to generate audio. It's going to be a bit tinny. I apologize for that, but the room is not good enough for acoustically for everything else. This is just a quick Thursday update. I'm going to run through sort of the major plays that we've got on, have a look at the key levels and what might validate or invalidate those trades. So let's start with the dollar. Dollar's actually ticked up a little bit today and just fractionally higher than yesterday. And you can see we've got this sort of progression higher, higher highs and higher lows on this DXY chart, the Dixie. We're now above the 20-period moving average and approaching the 20-day simple moving average. That's this purple line. Last time we got there, we rejected, and that's basically what sparked off our long trades across the other majors. So I'm no longer long on the euro and now most recently the Aussie dollar. We just got out of this trade and it's moving down a little bit. Let's see if we can get back into this later. I suspect we may have to actually come back down to this breakout trend line on the Aussie before sort of surging higher, but the overall structure looks pretty good. So let's see how we go. The only other currency play that I got on is a short on the dollar yen. And well, let's see what happens. The Japanese bond yields hit sort of all-time highs. So we haven't seen a commensurate move down in the dollar yen. Expecting we'll see that. Bit of a double top there. Will we see intervention? I don't know. Not going to focus too much on that today. I want to get back into some of the plays that we're busy trading. So let's switch across to the next page, and that's stocks. Now, I'm long across the board here on NASDAQ, S&P, German 40, and Circle. I want to talk about the invalidation levels that might sort of force me to exit these trades. And looking at the NASDAQ, we can draw a couple of things. First of all, a trend line up from these lows, and you can see it's a perfect trend line, actually. We've touched it perfectly every time, 3 touches now, and I suppose we might have to try a 4th touch. We've got a 20 and a 50-day moving average confluence over here. We might have to get back into there and bounce out of there. I think the invalidation point for the NASDAQ really is this trend line, these moving averages, and more pertinently, the support level just below here at the 38% fib. Notice how we held the 61.8% fib at the 100-period moving average, and on the next occasion, we got down through the 20 and the 50, but we did hold the 38.2% Fibonacci. We bounced out of there. So now we want to hold the sort of 25% level around these moving averages. I'm hoping that we won't break down through those moving averages and that we'll hold support here. And of course, the S&P will probably follow something similar. The S&P has made new all-time highs, whereas the NASDAQ has not. So that's interesting for a start. And of course, it's all about sector rotation. The S&P has also got a trend line. I must say these are all starting to look a bit droopy, a bit weak, a bit sort of lackluster. There's the S&P trend line, very much like the NASDAQ, perfectly touching. And we're now dipping down into the 20-period moving average. With a bit of luck, we'll hold the 20 and the 50 today, but any movement down through the trend line and through the 50 and that swing low that we had a few days ago will be concerning for the S&P. Any downside moves might be or should be limited to this level down here at the orange block and the invalidation point, and that will be the level at which I decide that we're no longer in a bull market on the S&P. Just switching back to the NASDAQ, you can see the same sort of level there at the black line, at that horizontal line just there below that swing low. It's not a double bottom here. Actually, that low got lower than the previous one, whereas on the S&P, it's actually a double bottom. I'm also long on the German 30, a new fresh long on the breakout through this very beautiful flat top. I expect we may have to retest it. Notice also here the 20-period moving average moving up. There's the 50 and the 200. And I wouldn't be surprised if we got back down to the 20 and then bounced out of there and carried on moving up. So probably the retest, the kiss goodbye, has to happen. I'll add some more size onto there if we bounce off the top here and reject back up to the upside. I'm also long on Circle, MSTR, Tesla, Coinbase, and NVIDIA. Don't have time to talk about those, but I will talk about them in Sunday night live stream. Join me there on Sunday. The notification will go up shortly. Now, going across to Bitcoin and crypto in general, I don't want to cover it too much, except to say we did talk about this in the members live stream yesterday. And actually, what I want to point out is one chart here, really. And that's this Bitcoin weekly chart with higher highs and higher lows on this Heiken Ashi chart in a bullish sort of structure. If we break down through this level, though, we will be entering a bearish structure, particularly if we break down through that previous swing low. And I expect we'll have to move down into that consolidation zone into potentially the 70s, 60s, and even 50s. So we really do want to hold here. What's interesting is that this candle this week is the first green candle. Maybe you could say last week was sort of fractionally green, the first green candle. And we don't often get, in fact, never really, one weekly candle forming green and then a reversal straight afterwards. We normally get at least 2. So I expect at least 2 bullish weeks from Bitcoin. And we've also got the 20 and the 50-week simple moving averages consolidating here just above us. We should rally up to that level at about 101 or 102. We'll be looking for a potential rejection. But so far, structurally, it looks pretty okay, as long as we don't break down below this recent swing low after this recent sell-off over the last couple of months. So that's it. I'm also long on Ethereum, XRP, and Solana, and I've got a whole bunch of altcoin, the minor altcoins, which I'm swinging in and out of as time goes on. Now, onto metals. This is something that a lot of you be trading. I'm still short on gold and long on silver. I've reduced the size on the silver trade, but let's have a look at gold. We took our last tranche here at the 78.6% Fibonacci. Of that move down, which bounced off the 20 period, we got back above the purple trend line. We got short again to add to those two shorts. And we're now moving into, well, quite a lot of profit on that short. And we're catching up. We're moving back down to the original shorts. A lot of people think that gold is likely to just keep on moving up, but it's not. I think we're going to have some consolidation at the very least, or a pullback. And now that we're basically breaking down through this purple line, next to come is the 20 period moving average, then the 50. And I think we could get back down, down to about the 4,000 level, the big round, and that attempt to break down through there previously. And with a bit of luck, we can actually get back down to the red trend line, this long one coming up from ages and ages ago. And don't forget, we've got a much longer term trend line if we put this onto the weekly chart, which ends up at currently at about 2,500. But in time, that will sort of catch up. But actually, more importantly, is the breakout triangle in the center of the page. And I've always contended, and I keep on saying that we may have to retest that as the central piece to this move. There's the move up, consolidation, ascending triangle, next move up. Next logical move would be basically a retest of the triangle from the top. And that could take us all the way back down to 3,500. But let's not get too ambitious. Let's aim for some of these supports down below us. And I think we could get to 4,000 at least. So that's gold. And then silver, I'm still long on, but I'm willing to, and I've reduced size a little bit. You can see all my short positions on gold, long positions on silver, the green arrows. And we've been long on silver actually forever now, since about $27, I think. So we've taken plenty of profit on the silver long side, and it's now probably time to start to exit. Now, it's very overbought, and we've got this exponential move. We've got potential targets above us still. I'm not saying this is going to move down. I'm still long, still holding my long position. And but I've got that offset by the gold shorts. Now, let's look above us. The next two fib extensions are at $91 and then over 100, about 102. We could get up to there. And the way this is shaping exponentially, it looks like it's quite possible to get there within, the next few days or weeks. So don't get short on silver until you see real evidence. Or at least if you're going to get short on silver, perhaps consider being long on gold. I've played it the other way around. So I'm long silver, short gold. And that's it. And I've also got a short on copper now. We were hedged. I've now unhedged after we moved higher. I had to hedge this trade. I've now unhedged it. And that's my last short position. We have a very small hedge position in the middle here. I think copper could get back down, ultimately down to the red trend line, I think, and maybe even the green trend line. So keep an eye on those. Draw those onto your charts. Have a look at where those are. But I think point B is probably easy. And further down would be a little bit tricky, but somewhere down into these sorts of levels. By the time we get there, we'll probably be at around about, $5, $4.90, something like that. We're currently trading at $6. Can you believe it, on copper? So short on copper, short on gold, but long on silver. Bit of a mixed bag. Now going across to energies, natural gas. I'm now long on natural gas, having taken a position yesterday. For those of you in the private group and who were trading with us yesterday, you'll know about these positions. I've got some longs from above. I've switched to the natural gas chart here on Black Bull, just so that you can see the gaps. I'm going to show you the actual chart that we've been trading off at FXCM. There's a weekend gap at the top here. There's a contract rollover gap in the middle. And also we have a weekend gap over here that we've just closed with this last little rally from yesterday. We've broken above the 20 period moving average on the 4-hour chart, which is good. And if we look at this on the day chart, you can see we've got something akin to a tweezer bottom with two spiky sort of candles, but we're still below the 20 and the 100 period moving average confluence here on the day chart. Let's go across to the FXCM chart. This is the chart that we've been trading off, and I'm going to switch back to the 4-hour for this purpose and show you where those gaps are. I've highlighted them in red. There's a weekend gap, rollover gap, weekend gap. We've now closed the first weekend gap. We've got a rollover gap above us still, and a very significant weekend gap, actually way above $5. And I think we may have to retest that because it is a weekend gap and not a contract roll. So let's see where we traded, what's going on this 4-hour chart today. this is where we've been trading. I've got long positions from here. I hedged them all at the bottom there when we broke down through the support level. I explained all of this in the members live stream yesterday. And if you'd like to be part of those live streams, just join up at this YouTube channel. It's a couple of dollars, and you get to view the midweek videos as well and all the other members' benefits. But we're now moving up. We've closed that weekend gap. We're above the 20-period moving average here on the 4-hour chart, but we're below all the others, starting with a 50 and the 375 level, which is the crucial level to get through. Now that we've closed the gap, hopefully we don't come back down. It's looking a bit floppy again. If I zoom into the 15-minute chart, looking a little bit weak, but back to the 4-hour chart, maybe okay. Trying to hold here. And I expect we'll test the 50 period and the underside of this order block and the 372 to 375 level, and then we'll see what happens. My stop loss on this new tranche that I added here at the 20-period moving average is now at break even. If we return to there, I'll return to a fully hedged state with those positions and the hedge. In other words, I'll be neutral. But if we hold here and we move up, as I'm already net long, and we potentially break up through 375, I'll add some size to the long position and start adjusting the hedge to reduce the short side. So a little bit difficult, complex, because we had a massive rejection of the previous contract. As you can see, we've got a roll gap leading into the new contract, a weekend gap which shunted it down to start with, and then we collapsed all the way back down to the bottom where we started, and then another roll gap which shunted us even lower, and a weekend gap to boot. We've dealt with a weekend gap. We've still got the other gaps above us. Let's see what happens at 375 if we get there. And remember, if we drop down through this level back down to the 20 period where I got in on the last long tranche, I will exit that at break even, and then I'll be fully hedged again. I'm not taking any chances with this, and it's not easy to determine the next direction. It's not all that obvious. So that's my play. So I'm still long, but I will stop the last long tranche out at break even if I have to. Return to a fully neutral position, fully hedged, and take it from there. Now, oil, I'm still short. We put a new tranche on yesterday. We've been short variously along the way. I've been short forever and a day on oil, and I'm still short. And aiming down to the $55 level, that's this twin double bottom over here to the left at 55. Looks like we're going to get there. We've got a falling wedge pattern, which eventually will squeeze out through the top. Any squeeze through the top here might invalidate the trade, but it's basically at break even now, so there's no risk on this trade. Short from over there. Looking for this to get down to 55. Let's go to the day chart. This is the day chart. And then a breakthrough there, I think we could eventually get. And it's going to get messier and messier and choppier, but a breakthrough there could take us down to 50, probably 48. And then I think we'll probably return all the way back into the 60s after that. So that's oil and natural gas. I hope these are useful for you folks. It's a little bit difficult for me to do all of this on the road because I haven't got all my charts, all my kit, everything around me. I'm in a hotel room, and it's just a little bit weird, a little bit stressful. Trading is all about recognizing patterns, really. And, we like to look at things in the places where they're meant to be. So, I know where my charts are. I know what shape they are. What's on the big screen, on the small screens, and in the hotel is different. Right, URA. Someone asked about URA yesterday. Let me just reiterate. I'm still long, and I'm looking for this to break up, and it seems to be doing so today. Above this break up and hold above this yellow zone and into this order block. Ideally, a break up through and, to close that little gap on the left-hand side here and close above this order block. But we'll take a close above the yellow block for now, and so far so good. I've got 2 long positions on there on URA, the Global X Uranium ETF. And then I think that's it, folks. I'm going quickly across to this chart, softs and grains. I'm trying to get short on coffee. It could be today or tomorrow. Anything up along this path where we get a rejection on coffee, I'll be looking to sell. A bit of a spike up into the channel center line yesterday. It could be the trigger. Let's see how we open up today. And then looking for potential short. And we also took fresh longs on soya, on corn, and on wheat early this week. I'm still long on lithium, as you might know. Let's have a look at that one quickly. And lithium could move a lot higher. I'm going to show you this on the weekly chart, see where the targets for lithium are. It moves very linearly. It's very interesting to trade because it moves in these sort of straight lines. And we're off on another run right now, I suppose, all the way back up to the top. That's lithium. And just to remind you, if you're thinking of uranium, how far can we go on uranium? Just to finish this off with the uranium weekly chart. And that's where we got long initially on uranium. We're long again now, but look how far we could actually go. And this is the weekly chart on uranium. Beautiful U-shaped bottom with expanding volatility as we break out into a new bull run. I quite like this one. And I'm going to remain long on uranium. Folks, have a great trading day. I know this is a messy old video from a hotel room. It's not the best, wasn't delivered the best. It's a bit choppy and starty and weird, but I hope it was beneficial. So take care. I'll see you on Sunday night for my live stream. Make sure to subscribe to the channel, click the notification bell so that you don't forget, and I'll see you live on Sunday for a deep dive into all the markets. See you then.
Morning buzz, the market's live. Charts are crazy, watch them dive. Candlesticks, they never lie. Swing and sway and touch the sky. Buy low, sell high, that's the game. Find the trend and ride the fame. Bulls and bears, they all unite. Dance of numbers day and night. Swing, trader, swing, don't you stop. Catch the rhythm, make it pop. Don't get greedy, don't get mad.